rally. Don't you like that? Up 330 points for the Dow, up 150 for the Nasdaq. I think it's appropriate that we bring in Michael Lee, who is traditionally a very bullish kind of guy. All right, Michael, welcome back to the show. Are you confident that the president and his team can fix the supply chain mess? Because that's what's got everybody worried at the moment.
No. Not in the slightest. It doesn't mean it won't get resolved, but if it does, they're going to 20. They just went to 24/7 at the Port of LA in the last few days. Like, why weren't they pushing for that months ago? Pete Buttigieg was confirmed on February 2nd or 3rd. Look, this is what happens when you take political hacks and you put them in very significant positions for the U.S. economy. I can tell you right now, we would not be in the situation if Peter Navarro was in the White House, right? There is no one like this in this administration that will work tirelessly and relentlessly to solve complex problems to get the economy moving forward. As a result, the transition period of this inflation is going to be much longer than it should have been or could have been. And if you think about it, inflation in the 70s was transitory too. I mean, you didn't have it in the 80s and 90s. So look, it looks like these price increases for certain things are going to be here for a while, and the supply gluts that we should be seeing come the end of the year, the beginning of next year, are probably not going to be happening until much further in the future. And you add on top of that, the price of oil looks like it's on the way to 100. So it's just it's going to hurt consumers in their pockets.
Well, if that's the backdrop, oil prices rising, supply chain problems, you're not calling for new highs for stocks, are you?
Well, look, I think, yes, I am. But what I think is the bond market needs to get comfortable with the playing field in front of it. And so we've seen tremendous volatility in the 10-year Treasury since Jerome Powell spoke a few weeks ago, and that has sent stocks for a tailspin. And what I would say is until the 10-year finds a home, whether it's this 150 to 155 range, the 165, 175, 190, 2%, until we find a home and the bond market gets comfortable with where inflation is going and where the economy's going and growth in the economy is going. Once the bond market gets comfortable and finds a trading range, we are off to the races because we are in a multi-year expansion. So that's kind of my thought, is that we're in a bit of a race to nowhere until the bond market finds a home. Maybe we're going to stay in this 150 to 155 range, and Brian Belsky is right. We're off the races because earnings estimates, I think, remain to be too low. We're in an expansionary phase, and even with tapering and a few rate hikes coming towards the end of next year, this is still an incredibly loose money economy. So, and then any sell-offs, as we've seen, are going to be seen with massive buying. You have $4.5 trillion in money markets, a 10% savings rate. So, look, there is good news behind it, but this is a problem that should have been going away, and it's going to persist.
You don't change your tune, do you? You're still saying stocks are going to new highs in the future. Sideways for now, by the looks of it. All right, Michael, thank you very much, sir. I know we'll see you again soon. Right, it is now 9:30. Off we go. Thursday morning. Let's see how we